Hello, everyone, and welcome back to the practical application series of the all-new Blueprint strategy course. And welcome back to module 4, market timing. Today, we're going to cover energies, quick and dirty, just crude oil, as well as natural gas. And for both of those, you want to use the custom unadjusted charts. You want to use at CL equals 103xn and at NG equals 103xn as well. There's actually quite a large difference, especially on natural gas, as we look at the custom versus the normal unadjusted at NG chart. So we want to use our custom ones for that, just as a side note. And we're going to start with crude oil. And what we're going to do is we're going to do our daily income, because we've done so much weekly income. And for crude oil, we've already started some work on the daily income as well, which is a level that got triggered there and that, we had looked at before. And now what we're just going to do is we're just going to remove this, right? Because this has played out now. And we are going to do the analysis and or update the analysis, right? Because this is going to be part of your business. Now we've done so much on our weekly income charts. Now all you need to do is you need to go in and you need to update these, right? Because most of your work is done. You know what you want to do when you want to do it. So all you need to do is you need to continuously update those charts. So once the major bulk of work is done, it will become a lot easier for you to maintain your charts and to maintain a low workload with this. As maintenance of the charts is much easier than creating all the levels and understanding everything. It's much harder than once you've done it, you can just maintain it. So let's start with our location, see if anything has changed here, and the demand has changed a little bit, right? So this was our prior demand, and that's where also the yellow boxes come in quite nicely, because now I can see, well, there's a new rally-based rally here. And with that, I'm just going to cover myself again with the entire low. And all right, so that's my new demand, right? That's my new demand. So I generally like doing that when I'm close to a low. When my distals are close to a low, then I usually like to cover myself with that low. So I'm just going to do that here. And already we see the true seasonals are bullish. From here, we already had that line in from here all the way to July. So we still may have 1 or 2 more weeks where we should be buying pullbacks of price. So right now, price is borderline low, and the location hasn't changed that much, but there's a new level that we had to update there. And so in terms of the trend, it continues to be a sideways trend, right? It continues to be a sideways trend. So nothing has changed from that perspective either. So we're at a sideways trend. And now looking at the commercials quickly, I have them somewhere weekly. Here they are. So the commercials are bullish. So we have a bullish commercial setup with a true seasonal steep rally that we expect, right? So commercials are buying, true seasonals are bullish, fundamentals are aligning perfectly here. So what we want to do in a sideways trend, if we want to buy, we have to buy low or very low. So let's put in our markers. Low is going to be 78.9. And this is going to be Now, this is going to be our window of opportunity. Now, in the low time frame, what I always like to do, and what you guys are used to on when we did the equity indices, we looked at the .D charts, right? And the .D charts helped us to align our levels with institutional levels, with institutional footprints. Now, there's also something like a pit trading session, which is similar to the .D chart. So that it's called a pit trading session for crude oil. All of this, by the way, with .Ds and pit trading and regular trading hours, all of this you can find a detailed course on within the futures course, right? So if you go watch the futures course from the beginning to end, you will know the pit trading hours, you know how to create the charts for pit trading hours, you know the .D charts, you know how to create them as well. So this is more like an all-encompassing, we're putting all the puzzle pieces together. So potentially, you know, I have to assume that you may have already seen the futures course. If you have, then what I'm saying sounds familiar. If you haven't seen the futures course, then go ahead and watch that, right? Lots of valuable content that you want to transfer into the charts as well when it comes to futures. And so I'm not going to use the pit trading session. What I'm going to do just to make life a little easier is I'm just going to add a volume indicator. And with that volume indicator now, I can see volume spikes, okay? And what I want to do is I want to align myself with the volume spikes, okay? So for example, if I'm going to look at the first level that I see here, a drop-based rally, and I'm going to check when that level was created, well, from here to here, there's virtually no volume behind that level, which means if there's virtually no volume behind that level, it means it's not a true institutional level, which means it's not something that I would be trading. Okay. However, where does the volume come in? Here it comes in, here it comes in, here it comes in, here it comes in. So here, from here to here, I've got volume that I can work with. And so what I can find is that's a leg out that's institutional. This is a leg out that's potentially not institutional, right? So I would rather go for this one here. I would rather go for this level than for this level. So just because here I've got the volume on the leg out, here I don't, okay? So and I'm naturally going to the wider version because it may be, that level may be quite narrow again. Okay, so now I'm gonna check my rules. Where are my lower time frame rules? I thought we copied them in already. 1 second. So departure. Yes, right. It's an explosive move out. Base, it's 1, 2, 3 candles within the base. That's fine. Freshness, I have the wider version here and Price has never tested this. So yes, it's fresh. Original, it's a drop-based rally. It cannot be original. Flip, it's also not a flip, right? If it's not original, very likely it's also not a flip. So no, no. Level on top of level. I look to the left. all I have is a large wick that's going all the way down here. So there's no level on top of level either. Okay, higher time frame coverage. Let's check. Well, my demand starts at 69.32. And here I am at 67.56. So I'm below that. So yes, I've got higher time frame coverage. Additional rules, profit margin measured from proximal to distal. How far has price traveled away from the zone? More than a 1 to 3. Eyeball it. Yes, it has been more than a 1 to 3. Arrival, we can't test yet because price seems like it's not coming back. Hasn't come back so far. So now asset specific rule, here I'm gonna put down, if we were doing daily income, we need to look at pit trading hours, which the shortcut for that is you can just look at volume and kind of see what a level aligns to a volume spike. Here the leg out is clearly volume spike, while here that leg out, here that level is not really a volume spike, right? It's a little bit maybe, but it's very, very tiny. That would still be probably the pit trading hours here and here, still the pit trading hours. But still, if we, let's say we didn't look at volume here, in this example, we would have put in that level. Then we would have said, well, explosive move, yes, base, all right, not the best because it's not indecisive, but we could still use that as a base. It's non-original, it's not a flip. Higher time frame coverage, 68, 70, yes. Level on top of level, level on top of level. How do we set the level on top of level? Well, we trade the lower one on the wider version anyways, right? So regardless on what you would have done, right? Let's say in this case, you know, you would have looked at the pit trading hour session and you said, well, this was part of pit trading hours. Then you put it in here. Then you say level on top of level. Well, I have another level right there. Then anyways, what we would set is that lower level, right? So now our energies, we have crude oil right there. We looked at the commercials, we looked at the non-commercials, we looked at the retailers. We can look at gold as a cross condition. We looked at true seasonality. We looked at supply and demand. And gold is a 10-day cycle in terms of trend following. We use as a secondary tool or odds enhancer. So the commercials are buying. And that was something that set up for our level before, is we were undervalued here. And we can even do this on a 240-minute, right? On a 240-minute here, we were undervalued and perfect. And so if price comes lower once again during this bullish period and we're undervalued again, we want to buy. Things will change after the 3rd of July. So after the 3rd of July, we may want to switch our mind into selling, because then the true seasonals will be down. And so depending on what the commercials will do then, as price maybe rallies until then, maybe then the commercials will be selling. And then we can look to short in supply with the commercials being sellers, and then with the true seasonals being down, and then maybe also us being overvalued here against gold. So here you can see, you know, it's daily income. There's a lot more that's going to happen, just a lot faster and more fast paced. So you need to spend more time on updating the charts. I think we looked at this a few times in the last weeks, and we had to constantly update this and do trade management and so on and so forth, right? And so this is just the nature of doing daily income as opposed to weekly income. As we did, you know, Dow Jones on weekly income, there's very little we need to update over time. So just depends on how much time you have on your hands. If you have a lot of time, you can do daily income, and daily income in the beginning is always great because it also means you can practice, and lots more is happening. So you can practice more screen time, but that means you need to invest more time too. If you have less time and you still want to practice, but you want to have a more comfortable approach of practicing and placing trades, do weekly income, right? And as you've done all the weekly income, trades and maybe there's nothing happening week after week, you've mastered that approach, move to daily income and see if you can do some things there. But for a busy executive professional with maybe also a family, weekly income is usually the bread and butter. But just as a side note. So now moving to natural gas. Natural gas on the daily, we've got some demand sitting right here. And what's interesting here, we have a gap. And in the past, these gaps got filled usually, right? So here we had a gap, then it got filled eventually. Here we had a gap, it got filled. Here we had a gap, it got filled. Here we had a gap, it got filled eventually. So here we have a gap. We can assume that this is going to get filled eventually. And this is quite a nice demand in general, right? Quite a nice demand zone in general. I would see this demand as a rally-based rally, right? Kind of a rally-based rally, even though the leg in is not as nice, but the leg out is really beautiful. And now in terms of supply, well, there's a huge gap right there, huge. So not something that I would even consider as supply. And then there's another gap area here, and then we may have some supply there. So supply is going to take us quite high. And maybe here we put ourselves to the gap fill area. Here's another gap. And so now we have supply, and it's large supply, and we have demand. And so from distal to distal, I'm in the low area already. And what do true seasonals tell us? A little bit down now. When is the seasonal low? Seasonal low potentially coming end of this month, well, July. Let's give us some more days. Well, first of all, make sure that I have more days. So I have 50 days stretching here to the right. So what I can do is I can also look at up to 50 days here. Wow, right? So good thing that we added some days here, because what do we want to do? Oh, it's quite obvious what we want to do, right? We want to look to buy. So buy the pullbacks into demand. True seasonals are very, very bullish. What else do we have? Do we know we want to do for natural gas? We don't want to look at the commercials. We don't want to look at the non-commercials. We do want to look at the retailers. And we also don't want to look at gold. So what we do is we just look at we mostly look at the true seasonals. All right. And also what we're going to do, natural gas right here. So true seasonals. And also what we want to do is we want to look at the non-commercials as well. So true seasonals here and supply and demand is already a powerful combination here on a daily income. Against gold, we'll see in a second, we're almost undervalued here. we have to check if we can somehow use this or not. Most likely it's not going to be working as well. But let's just look at the commercials and the non-commercials for a second. The non-commercials and the retailers. So the retailers are buying, which is kind of troublesome to see because it may mean that price is gonna go down for a bit, right? So that's not, oopsie. That's not good news. However, what is good news is that the non-commercials have really broken out of a big range, right? So that's something that we do look at, and the non-commercials, they're oftentimes preceding the big moves that are about to happen. And so I know this is kind of gonna be skewed here, but here we can see that the non-commercials broke out of a range, which then means that from here we should be expecting the lows to come in eventually. And it may seem like the lows have come in. So what we're just gonna do is we'll predict this bell curve here, and we'll predict price to go higher. The retailers buying now may mean that we get another pullback lower. However, that pullback lower we should use as a buying opportunity because the true seasonals are going to be very, very bullish here very, very soon. Let's look at the daily trend here. Happened. So this is how I would do the daily trend. I've got a low, I've got a higher low, I've got another higher low. I've got a higher, I've got a high, I've got a higher high, I've got the same kind of high. So we do have an uptrend. Technically, we do want to buy, right? Where do we buy? We buy in demand. So that's also what we were going to do. All right. So we've got an uptrend. The true seasonals are going to be up in July. We want to buy in demand. Where's our window of opportunity? Well, low starts at 2664. So we are already low. Price is already within the low. So we're just going to look below price. We're going to look to buy. And what I have is maybe some demand right there, right? Overall rally base rally. However, here I have quite a lot of candles in the base. If this is the case, right, we can always, for example, move one higher to a 480 or to a 600, and then we will have less candles in the base. Just putting our charts in a way where our rules are going to be met. So on a 480 here, it also looks a lot better, right? So we have a clear rally base rally here. Rally base rally. Quite a small zone. So I'm just going to put my distal right there. And then we kind of have a rally base rally. Now, let's test our zone qualifiers. What about the leg out? Well, the leg out is beautiful. Departure, yes. Base, I've got 1, 2, 3, 4, 5 candles in the base. That's fine. Freshness, we are even on the wider version, which would be right there. Price has never tested this area, looking to the right. So we're fresh. Originality, yes, it's original. It's a rally-based rally, and rally-based rallies are usually original because if I look to the left, I see pivots to the upside and I may see supply. So there's no demand on this side. We can agree on that. So it's an original level, and it may even be a flip, right? It may even be a flip. Maybe I would say arguable. The only way how I would say this is a flip is if, I say, well, this has been kind of downtrending, and then this is the breakout area, and then this was kind of the flip of the change of direction. So it could be a flip, a level on top of level. Well, we do have a level on top of level, right? We have maybe a drop-based rally here too. So so we have a level on top of level. And here I'm just visualizing the level, but I see there's stuff going on here, right? This was a rally, so I have the leg in, the base, the rally. So higher time frame coverage. Two, three, 4, 2. 2, 3, 5, 5. Yes, that's the higher time frame coverage. The question is, where's that gap fill at 266? 2.266. Now we can see that at 2.266 is our level on top of level, is at that gap fill area. So we can even refine it a little bit and put it to the daily gap fill right here. Because if price is going to come down, very likely is it's going to fill that gap, right? It's not going to make its way down all that way just to stop right in front of the gap fill. Very, very unlikely. At that point, it would probably fill that gap and then continue move higher. So higher time frame coverage, yes. And lower level gap fill on .d. Perfect, right? So additional rules, profit margin measured from proximal to distal. Yes, it's bigger than a 1, 2, 3. Arrival, so far it's a pretty nice arrival, right? It's just a steep move down, but we're not there yet. So we don't know if maybe there's going to be a drop that's going to be created here. Asset specific rules. We don't really have one for natural gas. And what I can say is that natural gas is what the play is on natural gas. It's a technical supply and demand game in combination with the true seasonals. That's the most reliable setups. Powerful true seasonals in line with powerful technical levels. And that's our asset specific rule for supply and demand plus true seasonals is what we have to rely on most. And then, yes, there's the non-commercials with breakouts and stuff maybe that we can look at, but on natural gas, and it's unlike crude oil, right? Because for crude oil, we really saw that the commercials are doing a good job in predicting the future. However, for natural gas, the commercials don't really have a very good track record. So here we rely on supply and demand and true seasonals. Okay, that's going to be our game plan for natural gas is supply and demand focus in combination with true seasonality. That's what we're going to do for for our natural gas. So here, our energies, we treat them quite differently, right? We look at the commercials for crude oil and align that with seasonals, and then look at supply and demand. For natural gas, we just look at supply and demand and true seasonals. That's what we have to rely on. And oftentimes that works very well, as you can see. If you've been following us for a while, then you know that these demand areas from down there had been working out quite nicely. So that's the game plan for natural gas, and that's the game plan for our energies overall. Thanks again for watching. Happy and safe trading, and ciao.